Many Utahns often wonder about the connection between taxes and spending here in the state. Here's a brief overview. For Utah government, there are 4 big revenue sources. These revenue sources are the income taxes, individual and corporate, which are taxes on income. The property tax, which is a tax on home ownership and other property. The gas tax, which is a tax on fuel for driving. And the sales tax, which is a tax on consumption. These taxes go into so-called budget buckets. For purposes of state budgeting, income tax goes into the education fund bucket. Property tax goes into the local revenue bucket. The gas tax goes into the transportation fund bucket, and the sales tax goes into the general fund bucket. The education fund is used for education purposes, such as public and higher education. Local revenue is used for local government, the majority of which is for local school districts. The transportation fund is used for maintaining roads, and the general fund is used for any purpose. Question: is it 1 for 1? Meaning, does the education fund cover all of education spending? Or does the transportation fund cover all of road spending? The answer is no. Let's put the spending buckets underneath the budget buckets. Here we'll identify one bucket as public education, another bucket as higher education, another bucket as roads spending, and another bucket as other government. From where does public education get its money? It comes from the education fund, local revenue, and a small general fund amount. From where does higher education get its money? Mostly from the education fund, the general fund, and tuition. From where does roads get its money? Well, some comes from the gas tax, and then another portion comes from the general fund in the form of sales tax. Lastly, all other government gets its money from the general fund. Some ask, what affects how much money goes into the education fund? The answer is lots of tax policy decisions. Some of the tax policy decisions include decisions on the tax base. Changes to the tax base, such as taxing unprepared food purchases at lower rates or eliminating from the tax base such things as purchases at doctor's offices or lawyer's offices. Exemptions. Some items are exempt from taxation. For example, the income tax form includes a taxpayer tax credit calculation that reduces the tax burden depending upon income level and family size. Credits or incentives. The state offers credits for certain things, such as contributions to a Utah Educational Savings Plan or the Economic Development Tax Increment Financing Credit. One of these is intended to encourage saving for education. The other is intended to encourage economic development and job growth. Another often asked question is, how sustainable is the spending with revenue? The answer, of course, is it depends. As an example, consider road spending. Of road spending, only about 38% of all road spending comes from the gas and diesel tax supported transportation fund. The rest comes from other sources, like sales tax or bonding. If you're thinking that only transportation-related taxes should cover transportation-related spending, then you'll find that the current road spending picture is unsustainable. On the other hand, if you're thinking that sales tax is a prudent use of general taxes, then the sustainability picture looks quite different. Lastly, if you're thinking that there isn't enough money, what are the options? Well, policymakers have lots of options at their disposal. They can change tax rates, such as increasing the income tax rate from 5% to 6%. They can adjust the tax base, or what gets taxed, such as imposing sales tax when you visit your accountant. They can change what types of things are exempt from tax, such as taxing business inputs. And they can alter credits, such as credits intended to incent job growth or saving for higher education. Each change, of course, has short-term and long-term consequences on economic growth. And that's the picture. Please don't hesitate to contact us with questions. Thanks.